Prosus holds your consumer internet assets outside of South Africa, listed on the AEX. It's a tech-heavy, obviously, a bunch of holdings that, Bob, I'm going to guess, do well in a situation where we all stay at home and live remotely. Is that the case?
No, that's absolutely right. I think the reality is that when we were forced to sit on our couches all day and in our kitchens, people still wanted to do as much with the world around them as possible, and they grabbed their phones and grabbed their laptops and started actually using online models more than they used before. But we've seen a lot as well as people for the first time starting ordering products at home, started ordering food at home, getting more involved in online payments. So it's been an intense few months dealing actually with a lot of new uses and use cases.
And so, Bob, good morning. What are you looking forward to? What are you excited about for 2021 with that stay-at-home economy or just the broad technology space in mind? Because we've talked to you many times about food deliveries, about education online. Certainly, my household has been doing more of both of those things. What excites you about 2021?
Well, what excites me most is actually to not be at home so much going forward. I think we're all dying to get out there again. I think for us as a company, what we've seen is that people who have used these models for the first time, and I think like your family, you're not alone. We've seen that they actually get quite excited about doing these things online. So I think what we want to make sure is when people hopefully have a much more normal life, that we still do a good job on giving them more convenience, because in the end, these models make people's lives better. They did it before, and I think now we just got to make sure it works for people going forward as well.
What are you banking on in the recovery, Bob? And I'm thinking, for example, of online travel, which has obviously been decimated for the last 12 months, but there must be so much pent-up demand plus savings that's going to equal a windfall for airlines, hotel bookings, et cetera.
No,
Eventually.
absolutely. I think what we've been in a great circumstance with our business is that we're basically all sort of focused on helping people do things online that they otherwise couldn't. But there were other models that were very depending on travel that obviously have suffered. And our business has been resilient and performing well all along, and we've been very blessed that way. But I do think we'll see really meaningful recovery in the travel sector. I think people are dying to get out there. And in some of our business, like we're a fairly significant player in online payments, particularly in markets like India, where travel spend has been completely decimated. And I think we made up more than up for that in other sectors. But when travel gets back on, I think it will be really, really helpful for us as well.
Let me ask you about other parts of your portfolio then, Bob. When you own a large stake in a business that approaches a $1 trillion valuation, that tends to get people's attention. And we've seen Prosus, certainly the share price move with the Tencent share price this week. You do trade still, though, at a discount to China's Tencent in terms of the amount of that business that you hold. What are you looking at to try and fix that?
I think the most important thing, and I think it was really clear in our last set of results, was that we have over the years built other great businesses that were initially small, and in most cases actually were consuming a lot of money for many years, are now looking to be very sizable and becoming profitable, and I think are becoming much more visible also to investors. I think that over time is really what I spend most of my time on. And actually, if you look at the financial performance of our other businesses, in spite of Tencent's great performance, our other businesses are growing faster and growing profits faster than Tencent Holding. And over time, that will basically set things straight. And besides that, I think we've spoken in the past, there's some dynamics, particularly around our size on the Johannesburg Stock Exchange, where we're now more than 30% of the SWIX index, which is a very unusual number. I don't think there's any company in any index in the world that comes even close. That leads to trading dynamics that don't help us with the discount. And when in time, we see if we can mitigate some of that.
But of course, one of the great things about making more money is you can buy more stuff, Bob. And you were active in the M&A scene in 2020. And I wonder if you think we're going to see such an active M&A scene in 2021. And do you plan on playing a part?
Yeah, I would already say that the year is off to a very, very active start. And I think that the fact that activity levels are very high in technology in general, I think will actually drive a lot of activity. Companies looking to also see ways to work more together. So I think there will be more consolidation. We are definitely very actively looking at new opportunities. We've recently done a few investments in agtech, so in agriculture technology, which is one area that we're really excited about because it's basically a huge part of society where technology has historically not played such a big role, very much like edtech. So I think there's actually a lot of opportunity out there in if you will, technology applications in relatively new sectors, which we're looking at.